Thanks for joining us. I'm Marlon Bowling with a look at our market action, and we're going to go to Chicago in a moment. Corn is still lower. In fact, it looks like we're adding to the losses here. Let's take a look at the board. We have December corn now drifting lower by 5.5 cents at $3.59 1/4. That is now well off its earlier morning high of $3.66 3/4. So we've given up about 7 cents now. And we have the March down 5. On the soybean trade, here we had the November contract hitting a high early today of $8.59 1/4, but now we're at $8.46 3/4. That's a 13-cent drop basically, and we're down about 8 1/4 from where we closed yesterday. We have January down 8 1/4 cents also. On the wheat trade, now on the wheat we have Chicago December trading a 1/2 cent higher at 5.13 1/2. This thing's been whipsawing all over the place today. New crop July is actually a 1.5 higher. Meanwhile, Kansas City wheat, we have December now trading 3/4 lower at 5.16 1/2, but it has been as high as 5.24 1/4 and as low as 5.10 1/2. July is a 1.25 higher though. Minneapolis wheat, we have the December contract down 1 1/2 at 5.78 1/2, and July is 4 3/4 higher at 6.11 3/4. Not too much volume in that particular contract, though. And on the cotton, on the December contract, we now have that trading 117 points lower at 76.55. Scott Gecas is at the trading floor in Chicago, and he joins us now. And he's with Longleaf Trading. A lot of excitement and a flurry of activity after the reports came out at 11 o'clock Central Time there, Scott. What are the traders saying about the report?
Oh, yeah. So just a report in general, just pretty much across the board, it was bearish on some extreme levels on soybeans to moderate levels on wheat. So the soybeans contracts, with the report, they were expecting about 438, or it came in around 438. They were only expecting 498. So it's for the last few weeks, everyone's been talking about maybe a 7 handle in soybeans. Now, with this report, it's a little bit more of a confirmation. I expect to see that within the next couple of weeks. You know, going into October supply and demand report, I mean, we're looking at ending stocks. They could reach 950. So with that being said, I mean, it's a perfect bearish storm for soybeans across the board. So we're going to see how that plays out. The only thing that could spark any type of buying is any type of deal with China, which doesn't seem like it's going to materialize anytime soon.
Now, on that corn number, it was higher than expected, but even according to USDA, they say the total was down 7% from a year ago. So, I mean, all things considered, is that silver lining here?
Yeah, the traders are definitely going off of the headline, so that's why you see the big drop, increased volatility, increased volume. There was no volume before 11 o'clock Central Time. So with that report, I mean, it was just all due to the headline. So you've seen a big spike in volume, big spike in volatility.
Okay, we'll come back in a moment and see if the livestock trade is reacting to any of this because of the big moves here in the grain markets today. We'll come back and talk about it with Scott Gecas right after this. Let's go back to our conversation that we have going on with Scott Gecas, and he's with Longleaf Trading. He's standing at the edge of the trading floor in Chicago right now. And Scott, on the livestock trade, let's take a look at our prices and talk about some of the underlying fundamentals here related to the trade. In the live cattle board right now, boy, narrowly mixed, and I mean narrowly mixed. October live cattle up 8 cents at 113.30. We have December up 7 at 118.65 per hundredweight, and the deferred for next year, February, down a nickel at 122.50, April down 18. So not much going on here. On the feeder cattle side, we have the October contract now 35 lower at 157.50. That's a $0.50 off our earlier high this morning. November down 32 at 157.30. And on the lean hogs, where we had a lot of pressure heading into that hogs and pigs report, well, they're coming back with aces today. We have the October up 135 at 62.65. In December now $2.54 higher at 58.02 today. So big gains in the lean hog trade. Yesterday, Scott, we had some really strong export sales for the pork. The beef was okay, about the same as what we had the week before. Beef had 16,400 tons sold yesterday from last week, and the pork 30,600 tons. Is this kind of a delayed reaction that you're seeing here on the hog side today? Kind of a relief reaction after the hog and pig report came out yesterday, or what?
Yeah, the hog and pig report came out a little bit bearish. That is completely offset by the expected 2019 exports to China. The African swine flu just keeps popping up. I believe it's already over that 10%, which was the benchmark of all of U.S. or all of the worldwide pork that was traded last year. So with the expectation that those exports are going to increase, I think that's why you're seeing a little bit stronger move in the hogs. Cattle market, it's a completely different dynamic. So with the cheaper grain prices, it's cheaper to feed the cattle. But at the same time, the cattle right now, this is a time where the weights are usually coming off, and if they're at least staying steady, if not climbing a little bit. So right now you're seeing a huge premium to cash around 8.6 versus the average of about 4.6. So that's a very significant difference. Now, what that means is with everything with the fourth quarter production being at record highs, December should be trading at a discount, not a premium. So that's a very odd dynamic. We're in a weird place for that with cattle. Still running into the supply concerns just overall. We expect the cattle market to drop a little bit here in the short term.
So relative to the lean hog trade, how do you think they rate as far as potential bullishness, the cattle market versus the hog market right now?
Well, they're going in opposite directions as far as fundamentals go. So the hog market is definitely keeping the cattle market up a little bit, but with the expectation, and this is it's a double-edged sword. So with the pork market, everybody is banking on the fact that exports are going to increase to China. If that doesn't happen, you'll see a collapse. But it's just a hope and a prayer that those exports actually show up. Right now, there's no reason for it to be that high, but it's again with the expectation that those exports are going to show up.
Any talk on the trading floor about negotiations with Japan, because they in the past have been known to be really big beef buyers?
Yeah, and that's been a rumor from last night till early this morning that they're trying to work out some free trade deal with Japan. So if that does materialize, I mean, that could add a little bit more lift into the market as well.
Okay, we'll keep an eye on it. Thank you, Scott, for talking with us today. Appreciate it.
Thank you.
Scott Gecas of Longleaf Trading in Chicago. Very interesting stuff as we wrap up the week, the month, and the quarter.